Hello and welcome back to Explain the Charts. Today we will be analyzing the GBPUSD pair, and we start by summarizing current events and news that may affect it. Recent headlines point to ongoing uncertainty in the global market. Concerns about inflation and the impact of potential tariffs on international trade are weighing heavily on investor sentiment. The Federal Reserve's cautious approach to interest rate adjustments is also a factor influencing the GBPUSD's volatility. These events have created a challenging environment for currency traders, leading to fluctuations in exchange rates. Let's turn to the daily chart of GBPUSD to see how the market has responded to the news. We observe a general downward trend over the past several weeks, reflecting the uncertainty in the global market. Notice the significant drop around October 11th. This sharp decline correlates with the initial announcements of potential tariffs, triggering a wave of sell-offs in the currency markets. The price action on the chart clearly reflects this news. However, we also see periods of rebound, indicating moments of optimism and potential buying pressure among investors. These temporary rallies were short-lived as the overall bearish sentiment seemed to prevail. Now, let's narrow our focus to the 1-hour chart to examine the intraday price swings. Here we can identify potential support and resistance levels and analyze how the price is reacting to them. This can aid in short-term trading decisions. Support levels, if breached, might signal a continuation of the downward trend and act as opportunities for short sellers. On the other hand, successful resistance breaks could suggest a potential shift in market sentiment, potentially opening opportunities for long positions. Zooming into the 15-minute chart will reveal even finer details in price movement, providing insights into short-term market sentiment. We can see frequent fluctuations here, indicating increased market activity and faster price changes. This high frequency of change is typical during times of market uncertainty. Analyzing the volume and transaction data on all three charts will give further context to the price movements. High volume during price drops often confirms the strength of a bearish move. Conversely, low volume during rallies could indicate weak bullish pressure. Looking for candlestick patterns, such as engulfing patterns or hammers, can provide additional signals for potential reversals. These candlestick patterns, combined with support and resistance breaks, can improve your trade entry and exit points. Based on the current analysis, the short-term outlook for GBPUSD remains uncertain, with potential support levels around 1.21 and resistance near 1.24. However, breaking above 1.24 could suggest a potential short-term bullish reversal. In the long term, the impact of geopolitical events and economic data will be key determinants of the GBPUSD's trajectory. If global uncertainty decreases and positive economic indicators emerge, the long-term outlook could shift bullish. Conversely, sustained uncertainty could prolong the bearish trend. In summary, key price levels to watch are 1.21 and 1.24 in the short term, and whether the downward trend continues in the long term is dependent on the market reaction to significant events. A decisive break above 1.24 would significantly increase the likelihood of short-term bullish continuation. Conversely, consistent failure to break above 1.24 would reinforce the bearish outlook. Keep an eye on volume, candlestick patterns, and any further news regarding international trade. These factors, in conjunction with the price action near 1.21 and 1.24, will provide valuable insights for making informed trading decisions.